Hello, St. John Baptist Church, Al McClaney with the weekly St. John Stewardship video. Um, Hoping you had a great week of the 13th. We're going into the middle of the year, and as I had teased last week, this video will be highlighting the market more so as we go through half the year, starting to get into the prime of earnings season, going into the third quarter. So as always, the disclaimer, no advice should be seen as recommendation, as I'm not a licensed financial advisor, as this is for educational purposes only, especially in this video, because I am going to be mentioning some specific stocks. So don't see those particularly as investments, but see it as needing to do your own research. So we want to highlight, again, growing God's kingdom. And you can see the verse I have here is Matthew 25, verses 25 through 30. I like the Message translation. The servant given 1,000 said, "Master, I know you have high standards and hate careless ways, that you demand the best and make no allowances for error. I was afraid I might disappoint you, so I found a good hiding place and secured your money. Here it is, safe and sound, down to the last cent." And this is how the response from the master came. The master was furious. "That's a terrible way to live. It's criminal to live cautiously like that. If you knew I was after the best, why did you do less than least? The least you could have done would have been to invest the sum with the bankers, or at least I would have gotten a little interest." And I encourage you to go back and read the verses before verses 25, because it's a well-known verse. There's also a version in Luke where it's talking about the master providing a source, and the expectation to the individuals is to grow the money. So we as stewards have a responsibility to grow God's money. He's provided that, and he rewards that. So that's where, in my particular case, I've chosen the stock market to do that. You may have different interests, such as businesses or even a nonprofit, different ways of growing God's kingdom. In this particular case, my interests lie in stocks and trading. And so let's get into more of that. So as I mentioned, this week we're going into earnings season. It started last week, and we had some financials report out. I think JP Morgan Chase was one of them. I think Netflix was one of them last week. But we really are in the thick of things. And I pointed this out as a tool before, earningswhispers.com. I actually get an email from them which has this type of image in the email weekly, and it'll tell me each day for that week which companies are reporting earnings. And earnings drive the market, because of course if a company has good earnings, then people want to invest in it. So you can see this week some big names like Halliburton, that's a oil exploration, IBM, Coca-Cola. We've got TD Ameritrade, which is the charts you see. I trade on a platform from TD Ameritrade called Thinkorswim. We've got Tesla, Microsoft. So some huge names here, Intel, American Express. So as these earnings come in, it's not only what did they earn in the previous quarter, but what's their forward-looking guidance? How do they see things in the future? So sometimes the market may still go up after a bad earnings, because it was already priced in, and maybe it wasn't as bad as they thought it was. And then there's some stocks listed here that have what I've called honey badgers, or a guy I follow named John Carter, meaning that stock just does its own thing even in a bad market. Tesla's one of those. Microsoft's been one of those. Chipotle has had a tremendous comeback. So these, again, are not names that are meant as recommendations, but just educational purposes. Do your own research, and I'm going to show you a couple of tools in the next couple of weeks that you can do some research. So remember, in order to find this is on earningswhispers.com. So let's take a look at the charts. And remember, I've got these levels, and I'm thinking about in the next week moving these levels over maybe to this low. But right now, this is the high for the year and the low for the year. But these levels are still relevant and applicable. So this is the S&P 500, or I use the exchange traded fund, SPY, and next week I'm going to go in more detail about exchange traded funds, or ETFs as they're called. And you can see again, we had some kind of hiccups this week. Anytime you see red, that meaning the day was ended mostly down, a lot of selling. So this was this week, had some selling on a couple of days, but in the end, probably for most of the week, just chop back and forth. It would be categorized as unchanged. We kind of started into the week kind of where we were, a little up, but we still continue to kind of push up, but as we call it, consolidation, where it's starting just to kind of consolidate around a certain level. So the next one is QQQ, which we talk about a lot. That's the technology. And as we've shown before, this is what has driven this market. But even then, a little bit of selling on a certain day, but we did hit a high, which was all-time high. And again, a little consolidation around this week, a little selling. So let's look at some of the stocks, individual companies that have been driving this QQQ. Facebook, and you can see how it hit its low for the year, but look how it's been doing for the remaining year. There was a big dip, kind of a sell-off, but overall, that is what you would consider a upward trending stock. So Facebook. The other one, Amazon. Makes sense. A lot of people at home, working from home, a lot of orders coming from home. So they've been up, but even they got hit with this week some down period. And when you see these emblems here, it kind of represents, usually that's when they're going to report earnings. So in the next couple of weeks, they'll be reporting earnings. So Amazon. So we're seeing Facebook. It still would be considered uptrend, even though we had some selling in the last couple of days. Facebook was earlier. Amazon, Netflix, another one. This got slammed, and you can see earnings were reported, and they weren't bad earnings, but it was a disappointment compared to what was expected, and also like the number of subscribers. So before then, this stock was just going all the way on its own, would definitely be considered a honey badger. In the end, it's probably going to consolidate and probably go back, continue up. So some people will look at this as an opportunity to purchase some Netflix, even though this is an expensive stock. It's sitting at about $492 per share. And then the last one I have here is Tesla. And this has really been a beast. It's not a large stock compared to the QQQ, but it's not a small stock for sure. Another very expensive stock closed at $1,500, and see where it's gone from its low, $361 at its low this year, to now trading at the close on Friday of $1,500. So you can see these are the stocks that have been driving the market, that's been pushing it up. So I want to talk about a tool that you can use, because many people don't want to do individual stocks, and sometimes it can be cost prohibitive, like the ones we were showing, pretty expensive. So you may still look at mutual funds, which is a collection of stocks in a basket, if you will, which create a fund. And a lot of you have those in your individual retirement accounts or your 401k at your jobs, or you may own them just as an individual. There's multiple ways you can have mutual funds. So there's a site called Morningstar, and the site by itself is free, but it doesn't offer up all of the functionality of a premium membership. So I'm not saying you should go purchase a premium membership. I happen to have one, but I have it through the Arlington Public Library. So I'm a member of the Arlington Public Library, which you know is free. And as part of their services, you can access this premium database through Morningstar. And it was one of my friends who's in a trading group that I participate in who recommended this a couple of years ago, and I noticed in the Arlington Public Library that it's offered. So from there, I can go to the database, sign up, and this is one of the screenshots, and it's called a Morningstar Investment Research Center. And this screenshot here, you could just type in a mutual fund name, and it will bring up that fund. And why is that important? So this is not an active screen. This is just a screenshot. So, but you could type in, and one of them I typed in was one of the mutual funds. And that mutual fund, I'm looking for the name here, and you can get the symbol. And the mutual fund was, I believe it was Putnam. And in that case, I was able to find the symbol. And the way I did it is I just did a Google search. It said top technology funds. And I just put the symbol, because just like a stock symbol, like a stock symbol for Ford is F, or Dell, when it was publicly traded, was DELL, or Amazon, AMZN. So mutual funds also have, they're usually about a 4 or 5 character symbol, and you just type it into that search bar. And I went to holdings, and this showed me the holdings in that mutual fund. So remember, before I was showing some of the stocks that were really doing well. One of the stocks I showed you was Amazon, and there it is. It's a part of this mutual fund, and it makes up 6% of that mutual fund. Here's Netflix, makes up 5% of that fund. Here's Facebook. Those are all stocks that I showed you individually, and you can see they make up this fund. The bulk of the fund, and even though it's still only 8% of the fund, and you can see the top 15 holdings when you go out to I think you can actually see all the holdings. Here I just selected the top 10. Alibaba, which is a Chinese-based company, makes up the largest amount, and then Salesforce. And you can see all of these. You may crack open that mutual fund and say, you know what, I want to have more exposure to that individually. So I see this fund's doing well, so maybe I want to look at just that stock individually to get more exposure to it. So that's a tool that you can use. And check your local library and see if they have the database available. And you still could get Morningstar, but I don't know if you can get this part that talks about the holdings. But if not, I know the Arlington Public Library has that. The other thing that's available, if you have the premium, which I got, and you can see right here, powered by Arlington Public Library, is the newsletters. So each month, Morningstar does a newsletter, but this is only available for the premium service. And again, I pay nothing for it because I'm a member of the Arlington Public Library. And there's different newsletters they have. One's particularly on funds, mutual funds. Here's one on dividends, individual stocks, and then ETFs, which next week I told you we're going to talk about. And then there's an archive here. So this is a great tool and resource that you can use, and depending on what library you have, it could be free. I think the premium service individually costs you, it's pretty reasonable. I think it's about 16, 17 bucks a month if you don't have availability for it to be free. So I just want to wrap up by reminding us the reason why God gives us the ability to have wealth. And first, to recognize it, it's God that gives us ability to obtain wealth. And this is Deuteronomy 8:18. I like the Message Bible translations. It says, if you start thinking to yourselves, I did all this and all by myself, I'm rich, it's all mine. Well, think again. Remember that God, your God, gave you the strength to produce all this wealth so as to confirm the covenant that he promised to your ancestors as it is today. So purpose behind the wealth is to grow God's kingdom. And for those of us who are at St. John, I want to remind an excellent way to invest into God's kingdom with the wealth that he's given us the strength, knowledge, and ability to get is through our St. John 99-year church anniversary. And I mentioned this last week. This will be going all the month of July, different levels in which you can invest in God's kingdom through St. John at different levels. But if you can't do this, do what God puts on your heart to do, because it may be much more than $99 or it may be less than 25, but put what God puts on your heart to do, because that's a way of showing gratitude to him and recognizing that he gives us the power to get wealth. And then there's multiple ways to give and donate through Givelify, on Shelby, which is on the church's website, through PayPal, which is also on the church's website. So until next week, I wish you well. And just a teaser for next week, we'll be doing the exchange traded funds specific information, and we'll continue into our earnings season, which is directly in the third quarter of what we're doing right now. So have a great rest of the week.